Hey guys, this is Brian Horton. We're going to discuss time frames for swing trading. So let's make it happen. For those who don't know, swing trading is for those who plan on trading for a day or longer. So it doesn't matter if you're trading for days, weeks, or even months. I personally like to trade for days on to about a week or so, give or take. So what I typically use for swing trading is the daily, the 4 hours sometime, and the weekly chart. And let's go ahead and show you how this works. All right, so I currently have the chart Australian dollar and the Japanese yen. I'm currently on the daily time frame. All right, so the daily time frame helps you to overlook the entire chart to find the specific trend that the chart is into, or if that pair is into. And when you're in the 15-minute, the 5-minute, the hour, you can't really see what the overall trend is. You can see some local trends, but not the overall trend. So I have the chart up here. I'm currently in the daily. What I'm looking at is the highest peaks and the lowest bottoms within that trade or within that chart. So let's go ahead and take a look at this one here. I notice automatically this lowest bottom here. So that's one thing that I just mentioned. So what I'm going to do here is draw a horizontal line just to kind of hit that bottom here. Okay, that's it. Currently, price is right here. Looks like it is 74.038. That's good. What I'm going to do is see when was the last time the trade or this pair was at this lowest peak, and it looks like it was about 69.961. So now I'm going to go to the weekly chart. So let's go ahead and hit W for weekly chart. Now, what that simply means is that every single line here contains a week of data. So let's go ahead and squinch this up a bit. Let's take a look. Now I am going to squinch it up and zoom. So now I am here in December or November 2019. I want to see when was the last time price was here, that blue line that I mark, okay? So let's go ahead and compile this here. And we're following this blue line. All right, so it looks like it crossed that blue line. And when was this? It looks like about April or May 2009. So we have 10 years since this price has been at this location. To me, automatically, this lets me know that all of this here has been floating above the 69 price. So this lets me know that price has been hovering this high for that long. So that means that Australian dollar and the Japanese yen is better off above this price. So when it hits this here, I'm going to go ahead and a buy and a long-term buy. This, you can actually float this anywhere between 9 to 10 years if you wanted to stay in the trade that long. I don't do it. Some people do it for long-term gains. Completely fine. So I'm going in a buy instantly as soon as I see this here. All right, so let's go ahead back into the daily chart here. And now what I'm going to go ahead and do is go back to today. All right. And we are here and back in November 2019. So now that I know that we are in an uptrend, that's what we identify first. What trend are we in? That's why we are pulling the long time frame, is to identify the trend we're in, okay? So let's go ahead and get our trend line. We are going to start about here. And this is not a trend line session, so I just want you to see how this is a trend line, or how this is going in an uptrend, okay? So we see that as an uptrend. It's been previous in a downtrend for quite some time. All right, now this bottom here was back in August 2019. So we have August, September, October, November. So 3 months it's been climbing. I anticipated on climbing even more. Now that I identified the trend, I want to identify my entry. So what I'm going to do is use the lower time frame to identify my entry. The reason why I want to go to a lower time frame is because it zooms in and narrows in what price is doing at a microscopic level. Remember, The 4 hour, the daily, and the weekly gives an overall view. Imagine you're in an airplane looking down and you get to see the patterns and see what's going on. But as you zoom down in that airplane, now you're looking at the neighborhood. You see what's going on to identify that long-term trend. All right, so we see the trend line. Now what I'm going to do, I'm in the 1 hour chart. Let's go down to even the 15-minute chart here. And I am also going to identify trends. I'm going to identify peaks and bottoms. I'm going to look at support and resistance here. Let's go back to the hour. All right. Let's draw some lines here because I am going to identify when to get in. So it looks like price has been hitting this here pretty hard. You can see some long wicks coming through here, some long wicks, but I'm going to make a line right here because it's been bouncing off some pretty good support pretty often here. We can see that it's going in an overall trend, but it's been bouncing here. So I want to wait until price bounce off of this line here, and I may even put a buy market here. I want to also do a stop loss, and because we're in a long-term trend, a stop loss, I would give it some breathing room, maybe even down to, I can put it right under these long wicks. It looks like buyers have been strong here and sellers have been weak. Every time it reach around here, as you can see, this wick here, buyers has been strong. So buyers, this is a buyer's gain. I'm going to put my stop loss around here, give or take, depending on how long you plan on being in the trade. I'm going to put my buy around this trend line. And to be honest, I can write this all the way up because like I identified back in the weekly chart, let's go ahead and go back to the weekly chart. I want to make a clear point that price has been hovering over that 69 for so long that what are the odds that price would go below 69? Now, can it? Absolutely, because the Forex market, just like any other market, is unpredictable. One thing I want to leave you with is that look at the Forex market just like any other market. Okay, it can be the real estate market, a grocery market, it can even be a clothing market. You want to see if price is worth what you're buying or price is worth what you're selling. If you have a carton of eggs and you see it in the store, 12 eggs, a dozen of eggs for $10, more than likely you probably won't buy it. You think it's overpriced. They may be dropping it into a sale so that it is affordable for those to buy. So once it's affordable, where you know that those eggs are typically at, you will probably buy it. Look at Forex just like that. Look at it beyond the pips. Look at it beyond the indicators and so on and so forth. Let's say to ourselves, is it worth buying at this price? I tell you, if you can think of it like that, that will completely change the way you trade. Look at it as you investing in a commodity, in clothes, in a home. Is that home too expensive or is it too cheap? You want to make sure you get it at a good price and then sell it high. Just like real estate, people try to buy homes. Those who invest in it buy them low. They wait till the market to go up, and right before it gets too much where they can't afford it, they sell it, and that way they make a profit. The same with Forex. I guarantee you that will change your trading. So that's going to be my conclusion. I really hope that you got something from it. Please join our Telegram. The Telegram is in the link in the description. Visit our website, briankenyahorton.com. We have a ton of free information for you to have. Like and subscribe, and please comment. I love responding to your comments. In the meantime, I will talk to you later. I will send new videos, my wife and I, and we'll see you on the other side. Have a good one.